The key takeaways is this is a really complicated situation. The geopolitics are terrifying, saddening, complex. The markets themselves are caught between that, inflation, a tightening Fed, slowing growth. It's a very complicated world. This is not the time for widows and orphans. This is not the time to make big bets because this is the time you'll get carried out. So be very careful in what you do. Manage your risk very carefully.
Bitcoin dropped back below $40,000 and erasing nearly all gains sparked by optimism about U.S. President Joe Biden's executive order on crypto, as digital currencies fell with stocks amid high inflation data and continued geopolitical uncertainty. The largest cryptocurrency declined as much as 7.9% to $38,582, falling for the first time in 3 days. Ether also fell as much as 5.7% to $2,553. Addressing the problems of Bitcoin volatility, rising commodity prices, and inflation, crypto analyst and macro investor Raoul Pal advises to focus on the exponential long-term trend and ignore the short-term noise. Hello and welcome to Money Talks. In today's video, Real Vision CEO and founder Raoul Pal updates on crypto adoption, government regulation, EU carbon credits, with an exclusive insight on Biden's executive order and what it means for cryptocurrency. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
This is going to tie back to Bill Tai as well. So Bill Tai talked about petrodollars and electrodollars, and that crypto is the electrodollar based around electricity, while the petrodollar was based around supply and demand for oil. So we've been in a petrodollar system since we floated off the gold standard. Now, what does that mean? It meant that the US was one of the biggest importers of crude oil in the world, if not the biggest importer. So they would spend dollars, and these dollars floated around the global system, keeping it liquid. But the shale oil revolution, as Russell points out, did the opposite. It meant that the US didn't need to import as much. Yes, it has to import some different grades of crude and stuff like that, but generally speaking, it's self-sufficient in oil. So that is a lot less dollars into the global system. So if there's a lot less dollars in the global system, the dollar goes up. It's like ETH burning. It's like Bitcoin supply. If there's less dollars sloshing around the global system because the US aren't spending it, it drives the dollar higher. And that's one of the things that's kept the dollar strong for a period of time.
Raoul Pal also shares his outlook on precious metals and commodities and how he expects them to perform in the near and medium term.
Tracy Shuchart talks about Tony Greer, that there's a big commodity supply issue and a reasonable amount of demand. I think the demand side of the equation will be weaker going forwards. I get the structural issues. I don't like owning commodities in spiky markets like this where you get news flow and it falls 20% overnight. I think that's hard. Commodity producers, maybe you've got a better opportunity, but they've been very spiky. So if you're not in the trade, it's not a trade I can enter now. The pressure, and are we in a commodity super cycle? The answer is I don't know. It's possible. We're due one at some point. I just don't know where the demand side of the equation is, except for ESG demand. So I can see the copper side, the nickel side. There's a whole bunch of these things that are very important in that. And so, with this reduced supply and normal demand in crude, I can understand the prices might remain high. Yeah. Precious metals, as we talked about, in a world where money's getting confiscated, in a world of inflation, of a world of geopolitical risks, it's got to be good. I mean, gold made a new high, backed off it. It probably consolidates for a while. And then if I look at the long-term chart of gold, particularly the inflation-adjusted charts of giant cup and handle formation, and my guess is gold goes to 2,500 plus. That's why I find it ridiculous that people insult each other for, I'm a commodity person, that's a tech person, those guys are idiots. It all works in the right way at the right time. I've been waiting to buy these blown up tech stocks ever since I talked about the exponential age thesis. I've not bought any of them yet because they were 2 standard deviations overbought versus the log trend. And I've been waiting to get to 1 or 2 standard deviations oversold. And lo and behold, that's where we are now. So I'm kind of looking at them very actively and looking for a change in the macro to buy them.
talking about the issues of government regulation in cryptocurrencies and whether governments will permit competition in fiat currency. Raoul Pal says that Bitcoin and cryptocurrencies offer a different use case, and he considers Bitcoin as a reserve asset and more like a medium of exchange than a currency.
I don't think it's all about money. It's the internet of value. That's why Web3 has become the narrative. So Bitcoin is a different beast and it's more of a reserve asset. Does it turn into a fully fledged medium of exchange and currency? Yeah, but that's not happening for 20 years. It's possible. I doubt it, because governments want to own their supply of money. They want their own tokens for their own community, like everybody else is going to have tokens for their community. But, I think as a reserve asset, Bitcoin works. But what we're actually talking about is the way of storing, transferring, and recording ownership and value in the digital age. Governments are not going to get in the way of that. And Gary Gensler made it, not Gary Gensler, sorry, the president made it pretty clear that it's all fine. They just want to make sure it's regulated a bit. If anybody had ever told you 10 years ago that inflation was going to be at 8% and bond yields were going to be sub 2, they'd have laughed in your face.
Yeah.
So it tells you there's something people don't fully understand about this.
Yeah.
And it's about the forward inflation expectations driven by demographics and a debt super cycle. So my view is higher inflation is disinflationary, forward-looking, and the bond market is telling you something similar. We think we know, and that these are all narratives, right? Everything we have is a narrative, and so memes rule the world, and gold as an inflation asset was a meme that's ruled since the 1970s because it worked. But maybe that wasn't the only reason gold worked. Maybe there are different reasons. So people need to be open, and I think part of it is the denominator idea. So once you took gold off the dollar off the gold standard, you're changing the denominator as opposed to just about the inflation numbers. So there's a lot to pass out, and nobody knows the answer. I don't know the full answers, but I know demographics probably explain the majority of it.
Raoul Pal also shares his take on EU carbon credits and why Russia's invasion of Ukraine crashed carbon credit prices.
The Europeans know they have a problem having dependency on foreign oil and gas. They're going to have to cobble together something, whether they do a backdoor deal with Russia or try and get more in from Algeria or figure out how to get it from Turkey, anything to keep it going. But given this shock, the one thing they have to do is get off oil and gas. So I do not think they're going to waver in their application of the EU ETS carbon system. I think they need utilities, power producers, manufacturers, shipping, and all of the things that come under this to start allocating their efforts on greener energy, which is driving an investment cycle as well. And I know I see people all the time laughing at it. It's like, you know what? The world without having to use oil and using abundant sources is a better world. Now, that doesn't happen overnight. And that creates these supply issues because you're pushing forward the narrative of ESG while trying to reduce the narrative of fossil fuels, but you've got a mismatch. And you're going to see these kind of squeezy prices until that happens. But over time, we will see a lot of technological advancements. So people say, well, it's impossible. It's impossible right now to generate that much power. And obviously, nuclear is the other one that's going to come into this.
Real Vision CEO Raoul Pal thinks that the Russian invasion of Ukraine has other implications, including accelerating the adoption of CBDCs. Even though it looked like a very smart move to weaponize reserves in the financial system, what is actually happening is that it is now forcing the de-dollarization of the world. Although Bitcoin jumped as much as 11% on Wednesday, amid optimism about the trajectory of the U.S. regulation of digital assets, as the framing of Biden's executive order on cryptocurrencies was made clear. However, those gains proved fleeting as traders digested the news, and the token is again trading near the middle of the range where it spent most of the past 2 months. So, do you think that inflation fears are justifiable for Bitcoin's volatility? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.